G'day again, and welcome to GoTax World. Today we're going to chat about the top 5 tax mistakes that the average boffin does on his tax return. First cab off the rank is claiming your day-to-day clothes to go to work. If you have to wear normal clothes to work, like a nice suit, or because your employer wants you to look professional, you can only claim a tax deduction for those clothes in certain situations. Now, this is a tax office audit target for the current year, so pay attention. If you are wondering why you can't claim your normal clothes or suits to work, well, the answer is simple. They are considered to be everyday work clothes that you could wear going shopping, going to restaurants, or even going to the beach. There are 3 criteria for making your clothes tax deductible. 1, your clothes must be compulsory or identifies with your employer, like a Qantas uniform or a bank uniform. 2, your clothes need to be specific to your job, like chef's uniform, nurse's uniform. And 3, you have a uniform. It mightn't be compulsory, but as long as it's got a logo on or identifiers, then that will be okay. So once your clothes qualifies, you're entitled to some other stuff. And that other stuff is dry cleaning and laundry. The next big mistake that people make, anyone that carries tools. They're taking tools to work in the back of the ute, and they're claiming the home to work travel as tax deductible. Now, this only applies if there's not a safe place to leave your tools at work. The ATO is now asking bosses to confirm that there is nowhere to leave those tools in a safe place at work. So if there is a safe place at work to leave your tools, and you make the choice to take them home every day, on the weekend, whatever, that travel is not tax deductible, and that's my warning. Next up, claiming immediate tax deduction for your tools and equipment. Tools and equipment fall into 2 categories. Those that are less than $300 at an individual item level, and those that are more than $300 at an individual item level. For those under $300, you get an outright tax deduction. For those more than $300, you need to deduct it over the life of the equipment, or predetermined rates set by the ATO. It's pretty crap, but the ATO doesn't want to give you the whole tax deduction in one go. And I'm reading this. Unless, of course, the tool doesn't last longer than a year. If the tool has a life of less than a year or it burns out, then you can claim an outright tax deduction for it. Next up, claiming self-education. Self-education can be deductible when it relates to your job or the furtherance of your job. So claiming a course unrelated to your income is just not tax deductible. So if you're a brickie and you want to go out and do a pottery course, and the pottery course costs you $5,000, then you have no chance in hell of claiming a tax deduction. The course must be directly related to your job and either improve your current skills or lead to an increase of your income. And finally, not keeping your receipts. Those without receipts don't get a tax deduction. You can put it on your tax return, the tax office can come sniffing. If you don't have a receipt, even though you claimed it, even though you spent it, if you can't find it, you don't get a tax deduction. So, there's a couple of options there for you. Take a photo of your receipt so it's stored on your phone, or you can even get our app when it comes out. With the use of our smart GoTax app, you can store all your receipts for future upload. Well, that's the end of our exciting, riveting tax problem question video for the day. And remember, if there's something strange with your tax return, who are you going to call? GoTax Busters.